Hello, everyone. Thank you for joining us tonight and welcome to our financial wellness webinar. I'm Jessica. I'm the branch manager at our Ankeny location. I graduated from Iowa State University with a degree in financial counseling and planning, and I've been with the credit union for about 8 years.
And hello, everyone. My name is Jocelyn Pena. I am the branch manager at our Waukee location. I've been with Greater Iowa for the past 2 years and a half. I've been in the financial industry for the past 10 years, and I graduated from DMAC. And today we are going to go over the financial literacy and why it's important, no matter how old you are and no matter your goals. Understanding money allows you to make more informed choices and to be better able to pursue your dreams. Congratulations on taking your first step in becoming more financially savvy. Our Q&A is open, so you can type out any questions that you might have during the presentation.
So today we're going to go ahead and be talking to you guys about what is a budget, different types of a budget, some savings tips for you guys, and we're going to be talking about debt. So good debt versus bad debt, and also ways that you guys can manage your debt. So even though you guys can't talk or type during the presentation, we encourage you guys to think about some of the questions that we might ask throughout it. So when it comes to budgeting, what is your first thought when you think about a budget, or what is a budget?
So, a budget is a summary of your planned expenses compared with your planned income for a predetermined time. So, what is a budget? And that's a budget. And who uses a budget? Everyone can use a budget. And why do we develop a budget? A budget helps you plan how much money you have every month. As you get older, income expenses will grow, and items of both dollars and complexity.
So without a budget, you might run out of funds until your next paycheck. So a budget is not going to go ahead and fix your money problems, and it cannot create money where there is none. However, a budget can go ahead and help you plan for those expenses or any future expenses that you guys are going to be having come up in the future.
So the type of basics of a budget. So there are three basic components of a budget. We have our income minus the expenses. That equals our net income or our loss. So when you have your income minus expenses and this number is positive, there is money available for your savings. When you have income minus expensive and this number is negative, then you are going to be going into debt. So we have types of budget. So when we're talking about earned income, we're talking about money that we receive. So any of your employer wage, that's income that you receive. Your public benefits, so you're talking about food stamps, housing assistance, cash assistance, social security. A lot of the times we don't think as this type of income, such as food stamp or housing assistance, as income that we earn because we don't physically see the money coming in. However, those money it's helping you with paying for your groceries, paying for your rent, so it is money that you're earning. When you're talking about legal payments, you have your alimony, you have your child support, and you have other type of legal payments that is also considered as earned income.
So one income type that sometimes we don't think about is going to be our portfolio income. So these are things such as stocks and bonds if you have any, as well as rental incomes if you have any of those properties.
And then we're talking about gift and borrow. So when we're talking about this type of income, we're thinking about birthday. So a lot of the times nowadays we get invited to birthday parties and we're not necessarily buying like a present for this person. So what are we doing? We're giving them gift cards. We're doing cash for these people. So those money that you're receiving, it's money earned as well. So it's money that you got. And when you're talking about Christmas, you're also same thing. A lot of the times, when Christmas comes around, everything it's booked, all the stores, it's packed. So what do? We go and get cash out and we're giving out this money to, the people that we want to do for Christmas. We're also thinking about, student loans. So while we're in school, we often get student loans. And what do we do with this? We're helping each other, pay for rent, pay for your groceries, pay for your cell phone bill, or pay for gas expenses that you might have.
So when we're talking about expenses, there's two different categories with expenses. So the first one's going to be fixed expenses. So these are expenses that do not change. So they're going to be things like your mortgage or your rent, car payments, maybe your car insurance, phone bill, and some utilities. And then variable expenses change from month to month, such as gas, groceries, clothing, some utilities that change month to month, and entertainment. So these are going to be expenses that you can control how much you're spending month to month.
So when we talk about budget, so a budget can be as simple or complex as you would like it to be, and it can fit your need. So when you write it down, it can be in a piece of paper. You can download an application on your phone. You can also use a spreadsheet. Again, whatever works best for you. There is no right or wrong answer. So right here we have an example of a budget. So what we use here, we use a spreadsheet. So what we have here, again, you want to make sure that you have your income minus your expenses to give you your net income. So what we did here is we put, on top of it, we added our salary. So how much do we get a month? Then we added our bank interest. A lot of the times at your institution that we don't know, it pays for interest. So we want to make sure that we add that into your salary, into your income that you have. Then after that, you want to have all the expenses. So with this being said, you have your rent, you have your groceries, food, you have your car payments, entertainment, you have your insurance, you have gas, cell phone, all of that. You want to make sure that you add it, and then it gives you your total expenses. And then after that, you want to subtract to the top of it, which be your total income. And then after that, you get your net income. So you'll have that money, to put it into a savings or anything that you wish to.
So one tip we can share for you guys is sometimes it is hard to kind of know where to start when it comes to those variable expenses. So going through your statements and figuring out, how much have I spent in gas the past 3 months, and getting an average is a good way to start out. Then you can kind of adjust it accordingly. Also, another tip is going to be to be realistic with yourself. So, sometimes we have things like car washes or subscriptions that we don't want to get rid of, and that's okay. But just being realistic to what you actually want to go ahead and keep and budgeting for that. So again, there is no wrong or right answer to how you can budget. It's really what works for you. If it works better to do a weekly budget, a monthly budget, semi-monthly budget, really whatever works for you guys and whatever you're going to keep using day to day. So one budget method that we have is going to be the 50-30-20 rule. So what this states is that 50% of your income should be going towards your needs. So these are going to be things like housing, food, utilities, healthcare, and your insurance. So after that, you're going to take 30% of whatever's left, or 30% of your income, towards personal care, entertainment, hobbies, vacations, subscriptions. And then the last 20% is going to go towards emergencies, savings, 401ks, and maybe other investments. So most people don't have 20% to save right away, and that's okay. Don't get discouraged. One thing to keep in mind is that if you already have a 401k with your employer, you're doing great because that's already coming out of your check and you're investing without even realizing it. But again, even if you don't have 20%, go ahead and save $50, $100, whatever you can is going to be a good start. And it's going to go ahead and pay off in the future for you guys.
So then we have our savings. So how do you think about your savings? Is this extra money that you have left at the end of the month, or is this as important as paying your bills? So experts show treating savings as an expense or a bill, then you more likely save more money every month. When we're saying paying yourself first, what this means is transferring it as if it will be a bill. So when you do have your vacations, for an example, you have that money aside that you can purchase, in your trip, and you can do everything that you want to do on those vacations.
So one thing you guys could ask yourself is, are you only saving for assets? Are you only saving to purchase that car? No, you should be saving for things such as car repairs, maybe your car registration, if you have children in recreational activities. These are things that sometimes we don't think about, but they do come up, and it does make our, savings accounts go down. So if we don't save with them throughout the year, it could really hinder us a little bit. So keep that in mind. One thing that's also important is making sure that your money is secured. So whether you have a credit union account or a bank account, they're going to be insured through the NCUA or FDIC. What does that mean? It means that if the credit union or bank were to be shut down, your money is going to be secured. However, one thing to note is that there are different limits of what they're secured for. So making sure that you talk to your financial institution is going to be the best resource for you. So make sure that you go ahead and talk to them.
So when we talking about savings accounts too, a lot of the times in the institutions, you can have different type of sub savings. With this, you can have different categories. So you can have on expenses, unexpected expenses. You can have for house remodels. You can do car repairs. You can do for vacations. You can do any as many too of sub savings account that you wish to. And then you can also do like money market accounts. A lot of the times we think that, oh, a money market account, I need a lot of money to put in there. No, not necessary. You can start them off, with at least $2,500. Again, every institution is different. So you might want to check with them just to make sure what is your minimum balance that you need to keep in there and to start one off. Then we also have certificate of deposits or CDs. A lot of the times, again, you do not need a large amount of money to start them off with. You can start them off with like $1,000 and you can have them for as minimum as 6 months, 8 months, depending on, how long you want to keep it in there. You can start them off that way. Then we go back and we have savings funds. So you can purchase through the Treasury website. You can buy them for as minimum as $25, $50, or even $1,000. These are higher interest rates but are longer term. So you can have them for 20, for 30 years. A lot of the times, grandparents will buy this for their grandkids and then they will give it to them when they have birthdays, or as they get older, because that way they can redeem them and they will be worth a lot more than what they purchased them for.
So now let's talk a little bit about investing. What is investing? So investing is a long-term commitment. You put money away and let it grow. You're taking the risk with a portion of your savings, such as buying stocks or bonds in hopes of making more money in the long term. So there are different sources out there that you guys can do. You can even do apps such as like Acorn, Vanguard, Fidelity. You can also talk to your financial advisor. If you don't have a financial advisor, that's okay. Credit unions and banks sometimes have one that are free for you guys to use. So make sure that you guys check those out and use them as a resource. They're there to go ahead and help you guys.
So when we're thinking about the goal, so list three things that you may require you to save money in order for you to buy them. Now think about how much each item will cost and how long are you estimated to have this to save for. How much do you want to put in aside a week, a month? How much do you need? And how would impact your budget? And what might you have to give up in order for you to do this in the long term? So, like for an example, I want to do some home improvements. So I know that this is going to cost me $3,000. However, I know that I don't want to do it right away. I want to do it next year. So I have 12 months in order for me to save. So how much do I need? I divide that by 12. And at the end, I need 250 that I know that I need to put aside every month in order for me to get it. That way, when the time comes for those home improvements, I just go into my savings account and just check it out and just go ahead and pay for that.
So when it comes to debt, do you guys think all debt is bad, or is there instances that debt can be good?
So a good rule of thumb is that if it increases your net worth or it increases your future value, it's the good debt. So for an example, we have education. A lot of the times we, have to pay for education. We have student loans to pay. So we're thinking, oh, I have to pay this. I have to invest on my student loans. But what happens when you graduate? You go and you get the job, your dream job, you get the job that you want. So it starts paying off, that, you can pay those debt off, when you're thinking about mortgage. So you're thinking about, oh, this is going to take me 15, 30 year that, a term that you might be getting for this. However, after that, it's over what it is, you're going to have a house that you're paid off and you're not going to have that debt anymore. And that home is going to be yours and it could potentially be valued at a higher amount too. Then we have small businesses. So a lot of the times, we have hobbies that we like and we enjoy. So what do? We start investing in purchasing, what we need in order for us to get what we want to do. So we start buying little things and put it together, like crafting or anything like that. And then what do? We turn around, we sell them, and then we get that back. So we're getting all the money back. So that's actually good debt that you're getting.
So if it does not increase your net worth, increase your future value, or if you do not have money to pay it off at the end of the month, this is what's considered bad debt. So these two get a little tricky. So let's talk about credit cards. So credit cards can be considered bad debt for a couple different things, but credit cards can be good as well. They help you build credit. You can get reward points. You can get cash back. But if you don't have money to pay it off at the end of the month, you might be getting yourself into debt without realizing because we just swipe cards, right? Like it's nothing. So making sure that those credit cards are getting paid off and that they don't have a higher interest rate is going to be very, very important. The one thing to know with the car loans is that they can also be considered bad debt for a couple different reasons. You have to look at your own individual situation. We want a new car, we want a nice car, but you have to be honest with yourself on the overall amount that you're purchasing the car for. So not just your loan amount, but think about the loan term, how much the interest rate is, and how long you're going to be paying it for. Is it 5 years? Is it 7 years? You have to think about these things and think about what the overall cost of the loan is going to be, because sometimes the loan is going to be worth a lot more than what the car is actually worth. So you want to make sure that you don't set yourself up with that situation at the end of the day. So whenever you guys are done with this presentation, feel free to go ahead and write down your good debt and bad debt and see kind of where you guys stand by your own individual situation.
So reviewing your budget often when life changes. So this could be, like a different job, like cutting hours or adding a new job. Every time you have something like this happening to you, you want to go back into your budget and you want to make sure that you update this. Also, making grocery lists before going grocery shopping can definitely help you with this. Why? Because when we don't have the list, we just start adding into our cart and we just start purchasing everything that it's not necessary. So if we have a list, we know for sure that we're definitely going to be buying what we need. And then maybe, just getting like a part-time job, this could be like Uber, they could be DoorDash, it could be dog walking, anything small that it can help you boost your income. This could help. And, with this type of jobs too, it's something that you can do during your free time. It doesn't have to be, a certain time that you need it for it. It's just something, just to help you out a little bit with your income.
So there's other ways to manage debt as well. So you can see about refinancing into lower rates. Just because you got the loan 2, 3 years ago, it doesn't mean that you have to stay with that same loan. You can see about refinancing. Maybe the rates went down. You can also call your like maybe cell phone provider or your insurance provider. They spend a lot of time getting us as customers that they're not going to want to lose us. So for example, I called my internet provider to see if there was any other promotions, and I was able to lower my bill $40 a month. So anything does add up. So I feel like that's something that not a lot of people know about. So make sure that you guys are taking advantage of that. You guys can also ask for help. Credit unions and the banks, we have a lot of people that are wanting to help you. Jocelyn and I are financial coaches, so we can go ahead and help you guys if you're interested in your specific situation and what different things are out there for you guys as well. And then the last thing is you guys are able to go ahead and consolidate your debt. What this means, maybe you have a couple car loans or a couple credit cards that you want to have one payment instead of a couple different ones. You guys can maybe use your home if there's equity in there. You can maybe use a car title if you have your car, or even just a personal loan. That way you guys can lower that interest rate to have one payment. It's going to go ahead and be able to help out. So we are happy to help you guys. But those are just some of the ways that we can go ahead and help you, or that you can help yourself manage some of the debt.
And we want to thank everybody for attending today. If you're looking for help or wanting additional information, feel free to reach out to Jess or myself. Check out our 9 locations that we have. Feel free to write any questions that you have. We're going to stay and answer all those questions under our Q&A. Thank you, everyone.
Thank you.